Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, guys, so we're just going to hop right on into the news and then we'll take a quick look at the charts. So, starting off with the news, we just had one piece of big news today, which was the FOMC meeting minutes. So this was just a disclosure of a meeting that the Fed tends to have monthly. And we always look for their thinking, what they're aiming at going forward, what we can kind of imply of what their words may mean for the coming months and potentially even the rest of the year. And what they released today was actually not as hawkish as I thought it would be. It was a little bit less hawkish. It was more of a neutral leaning with a slight hawkish tilt. So, they were very adamant. They want to keep raising rates. They don't want to get ahead of, the markets or any other country and, start easing before it's time or lessening the rate hikes before it's proper. So they reiterated over and over in what they released that they're going to hold the line, that they're going to slowly descale, deleverage, and that means that they're going to continue to raise rates around the same rate they have been. But because of how neutral they were, the markets didn't really take it too badly, right? So we had some momentum, some volatility, not much when these minutes were released, when the data was disclosed, but nothing too big. But this disclosure will make all the future data sets that are released very important. So tomorrow we're going to have international trade numbers. The initial jobless claims in the U.S. is going to be a big number tomorrow because of the FOMC meeting minutes. And then we're also going to get the crude oil inventories. Again, that's not going to affect the markets immediately. It may specifically just affect the oil markets. Actually, for it to actually start affecting the outer markets from oil, it would have to be some extremely unexpected news here, and I don't foresee that happening. And then we do get the PMIs for the S&P, which that's going to be fairly important. Again, the jobless claims are going to be a bit more, I would say, visceral for the markets over the PMI numbers for the S&P. And then on January 6th, we're going to get the unemployment rate, which is going to be huge, the non-farm payrolls, and the average earnings year over year. Again, big news, January 6th. And then we also get the PMIs for the factory workers and the factory orders month over month. So we're going to get a lot of forward-looking information here in January. So this is going to be a pretty important couple days. I'm looking forward to it, but I am expecting volatility going forward, at least between January 5th and 6th. Okay, so now let's hop right on into the charts and see what's happened today. So the dollar still continuing on the path, had a nice buy up yesterday, and then today's daily candle has slowed down just a bit, so still within this structure, right? So we may get that continuation to the upside, as my path suggests, at least getting towards these bearish fair value gaps, so around the 105.5 to 106, and then potentially spiking up a little bit higher, going towards this blue zone here, about 106.5 to 108. So we're still on track. If we start taking out this bullish engulfing candle, we start testing the lows of it, then it's very unlikely we're going to see that push up. We're probably going to actually sell right on down to 102.7. Okay, now let's take a look at the Dow. So looking at the Dow, so Dow's still fighting at this bearish fair value gap. It's been fighting here for days, over a week really, and it's very likely, as it continues to fill out this liquidity, to finally get a rollover to come down towards these bullish fair value gaps. And this makes sense if we're going to have some upside in the dollar. Now, if the dollar starts breaking down, then look for the Dow to start breaking up, filling out this gap, and potentially coming up to test this larger fair value gap, the bottom side of it, like it did over here. Okay, next is S&P. S&P is still in track as well. Again, starting this consolidation here. I do see this likely pulling back with the Dow. Now, whether it retraces all the way down under this pivot, I would say that's fairly likely. But we want to respect that it may have to pop up a little bit higher and start building out a larger structure to start tapping in to the liquidity right here. So we have this bearish fair value gap right here. So it may actually need a little bit more upside to target this liquidity before heading lower. So we may have to see this come up here a bit, grab some of this liquidity, and then break lower. Again, we'll wait and see. Again, a lot of it's going to be dependent on the Dow and the dollar. Next is NASDAQ. So NASDAQ trading under the top end of the descending trend line, of the top side of this descending channel. Really respecting it, tapping it a couple times, and we're probably going to see that continuation to the downside. And then as we go lower, I'm going to look for these low pivots here and potentially even this low pivot here at 10,427 to get taken out. And then at some point, coming down towards the 2020 high pivot before the lockdowns in 2020. So this is the ultimate level I'm looking for NASDAQ to get to before we have any major upside in anything. All right, next is oil. Let's take a look at oil, see what's going on. So oil breaking down, actually coming down, filled out this this bullish fair value gap, and now it's tapping into this very, very small one here. It's probably really, really small. I can barely see it. Just do it right here to here. Okay, so this bullish fair value gap is getting filled right now. Currently wick through, but right now close on top of it. We got to get rid of this one right here because it's been filled. And again, I was seeing a pullback here, but now I'm looking for a higher low from this level here if we're going to start having that continuation towards the higher, upper 90 to 95 and potentially even higher towards 100. But if we don't, then look for us to come back down towards this descending trend line and then eventually trading along it, trading around this zone, coming back into the $60 range. And that's once we hit $60, then I'm going to be looking for major long-term bottoming structures, bottoming signs for the months and years to come for a major move up in oil. All right, next is gold and silver. So gold having that continuation, and take a look at this, breaking the rising wedge structure, and to me this is extremely bullish. Watch for a parabolic move breaking through. I actually think it's pretty much started this parabolic move all the way from down here, had the nice consolidation, couldn't be held back and broke bullish. And now as the dollar has been weakening a little bit, this has room to go up. All right, so watch for this consolidation we have circled here, the liquidity above this level here at 1880 to start getting tapped into, and then you may potentially see a pullback from there. Okay, but once we get towards this consolidation, any pullback, look for it to be a bullish pullback, just like I thought it would be down here, and then look for an ultimate move going towards about 1960 and potentially even tapping into the 2000 per ounce level again. Next is silver. Silver, interestingly enough, actually having a bit of a retrace compared to gold. So gold showing relative strength, whereas silver showing relative weakness, and tapping into these fair value gaps, getting all this liquidity and getting pulled down to probably come back down towards these fair value gaps down here. That is, unless gold starts going into a hyperbolic move, then it will likely just drag silver up as a sympathy play. So watch for that to potentially happen. But if gold is going to slow down, then silver might be giving us that, that future look of what we can expect out of gold. So either way, if silver does continue falling down from here, look for this fair value gap here and ultimately these fair value gaps down here and here to be the ultimate levels of where I would look for silver to have a major bounce up from. All right, last but not least is Bitcoin. So let's take a quick look at Bitcoin, see what's going on. How has Bitcoin been doing today? Okay, so Bitcoin's still in this larger descending wedge structure, this descending triangle, and right now it's still within its range. Okay, nothing's really changed here. It is showing some life here, so depending on how this candle can close, it is definitely showing some life here. Look where it's been trading at for the whole day and pretty much the last 2 days where it's tapped into. You have this bearish fair value gap it's been trading through. Finally, we have this daily candle potentially close through it and actually officially close out this bearish fair value gap. And then we can be looking to potentially break up higher to fill out this fair value gap here. So we've been trading at the bottom end of this larger one, and also within the larger one we have this smaller one right here. So we may see some upside if we can get that continuation at least towards 17,200, 17,300, and then what will be in play next is this larger bearish fair value gap right here, which does coincide nearing the top side of this wedge structure that we're currently in. Okay, so Bitcoin is looking pretty bullish right now, even within this larger structure. Though where it is right now in the short term, it is right in the middle of the structure. So you want to be very careful if you're playing this, via the daily, swing trading wise. You are in the middle of the structure, but the actual structure in of itself does have a bullish bias, so we want to respect that. And we do have some targets to the upside. And if we do break down, just look for us to come back down towards this this bullish fair value gap down here, and this bottom end of this bullish structure that we've been trading in for quite some time. Okay, everyone, that is it for this market recap. I hope you found it to be useful. And again, if you have any questions, make sure to leave a comment or join the Discord. I implore you to join the Discord. I'm also restarting the free trades. Okay, so we're doing the free trades once more. If you're a premium member, you're still getting your trades. Plus, I'm going to be doing 1 to 2 trades, like a month, maybe like 1 every 2 months. Just depends on what I find, if there's an opportunity. I'm going to try to do 1 stock trade, 1 crypto trade for all members, free or premium. So hopefully you'll find value in that. And then if you do like any of those services I provide, whether it's the day trading room, the swing trade service, or the tutoring service, you can take a look and find that information down in the Patreon link, whether it's on the Discord or in this video. And make sure, if you do like this content, just give me a like, subscribe, maybe a share. I really appreciate it. All right, guys, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.